Jason there?
I'm here.
We're going to spend a large percentage of our time on healthcare. I want to make sure we got Jason in hand.
You ready, Jason?
Well, now I'm a little scared.
Welcome to the Telltales Podcast, where we discuss cash flow and its pivotal role in investing. I'm Mike Nicoletti.
And I'm Jason Wallace. Along with our co-host Hunt Lawrence, aka Mr. Cashflow, we're here to explore how cash flow drives the economy and investment performance.
And don't forget to join our email list at telltales.us to get the cash flow memo. It's about 20 pages covering 80 companies, U.S. government's finances, and the energy sector.
It's like having a masterclass on investing in your inbox every week.
The following conversation is intended for informational purposes only. You should always do your own work to determine if an investment is suitable for you.
Let's start with Exhibit C. Nothing here except that the Iranians have said that their response to the bomb in the closet of the political leader of Hamas on a safe house in Tehran, on the estate that the supreme leader occupies, the response to that, the retaliation for that, will be delayed indefinitely. I don't know what that means, but I don't think it's a positive for oil prices, because while they haven't yet gotten a ceasefire done between Hamas and Israel, I think they're getting closer. And that risk premium in oil is partly politics, like the Ukraine and the Middle East, and part of it is Saudi Arabia and UAE, who are like 3.5 probably of that 4.4 million barrel surplus, continuing to hold that oil off the market. And we've been promising, I think last week and maybe the week before, to cover the energy companies, the 4 pages on energy companies. I'd like to delay that another week to see how the oil price develops. But more importantly, the reason for delay is on Exhibit B, because that gas price, which has moved up, the prompt price, you can see at the bottom, 225. If you look at the futures curve, by the time we start trading the December contract or the November contract, it's supposed to be up in the $3 range. It was 57 degrees this morning in New York. It's going to be 57 degrees tomorrow morning. This is not good for power prices or natural gas consumption. So I'm a little worried that that's going to get pushed out. So we won't begin to see those futures prices happen. So I think gas stocks are a little problematic. On the revenues and expenses, that deficit of $1.6 trillion, especially if we wind up with a Harris administration, a continuation of the Biden administration, there's not much hope to get those amounts reduced. Sooner or later, I think there's going to be a problem. What you normally hear is that a treasury auction will fail. There's another way that it can happen, and that is in the repo market. I'm going to turn to the JP Morgan page. It's page 13. And that one's interesting because we've added another company there, Interactive, which we ought to call attention to. But JP Morgan, Morgan Stanley, and Goldman Sachs are very successful businesses. They have significant amounts of free cash flow. I mean, 57 million in the case of JP Morgan, 12 in the case of Morgan Stanley, and 18 in the case of Goldman Sachs. And they have plenty of cash flow to pay dividends and buy stock. But every night, those companies together borrow $1 trillion overnight in what is called a repo. And what a repo is whoever's lending the money, which are generally the $6 trillion in money market funds. They're lending the money Wednesday, and they make that decision to lend it. If markets get illiquid or subject to rumors, what can happen is that repo interest rate can diverge in a significant way from the Fed funds rate. And then alarms go off all over the world. if that happens, because we're the reserve currency. That happened in October 2019, just out of the blue. And if that happens, the Fed goes to the rescue. So it gets settled down by, within a day. However, when the Fed goes to rescue like that, it makes everyone extremely nervous. I believe that whoever's elected president is going to have an event like that. And I think it'll happen as early as June or July next year. If it doesn't happen by June or July next year, the probability of it happening by the fall of next year will increase. It's just inevitable because our deficit is too high and our debt's too high. And sooner or later, the elected officials in the Senate, the House, the presidency are going to have to deal with it. And the only other thing I'd add is Interactive Brokers is an addition to this page. It's one of the companies that Gwendolyn and Holly covered, and we'll get to them in a second. Very successful business and has free cash flow. It's basically on a worldwide basis providing brokerage activities at very low prices and with very reliable performance. And you can see that the JP Morgan, Morgan Stanley, Goldman Sachs, all in the 10 or 11 times free cash flow. Interactive is 15 times, but Interactive is growing and it's a little harder for the others to grow. So we decided to install it on page 13. Mike, Jason, anything to add?
On Interactive Brokers, that's the brokerage that Top Mark Capital started with. Even at our infinitesimally small size back in 2012, they were able to basically provide us the same level of access that one of the prime brokers would give. The other thing maybe relevant to macro stuff is this jobs data revision.
Yeah, why don't you and Jason take that one?
Yeah, so the jobs data is something we've been following almost probably for the better part of 2 years now, coming out of COVID. Some consistent things in the BLS reporting of jobs data is the headline numbers have looked good. But when you look at the full-time employment versus part-time employment, a lot of the gains we've had were part-time jobs. Each month they go back and revise the last 2 months down typically. And then we've seen a significant chunk of the full-time work going to either government employment or healthcare, and healthcare is certainly growing, but some changes behind the scenes were that if you care for a family member, you can then be classified as a healthcare worker, and that is maybe was driving some of the jobs gains. So what happened today was the BLS produced a revision for an annual basis, so March of last year to March of this year. And that's not unusual. They do it every year. But what was unusual was the magnitude of the change. So they revised the job gains down by 818,000 jobs. So in perspective, for that time period, they had estimated a gain of 2.7 million. So this is a 30% correction. So not a statistical rounding error. The last time a revision of this size occurred was 2009. So not a good time back then. But yes, that's what happened today. And then I'd be curious, but of those jobs that there's revised down, the breakdown between part-time work and full-time work, that'd be really interesting to see.
All right. I think we're going to devote 4 or 5 minutes to Gwendolyn and Holly. They have to go do freshman orientation starting late this week. The work we've gotten from them is terrific. I guess I'm going to lead off the discussion. And what we started with was the idea that you could learn about a company by studying its founder and whether or not the founder was successful and whether he or she was able to get everyone else in the organization to share the vision and work hard and work effectively. The question, we'll try Holly first and then Gwen. You've been through a number of companies. For Holly, which is your favorite company? And a second question before you come up with your favorite company, who's your favorite founder?
Yeah, it's definitely a tricky question. I think my favorite company would be the most recent one that I looked at, which is NVIDIA. They really just had a lot of resilience after a pretty bad failed product launch because they were making these like quadrilateral pixels for GPUs and for graphic design for video games. And just as they launched it, Microsoft said that they would only support the more conventional triangle one, so their product was completely useless. Instead of folding the company, the founder, Jensen Huang, ended up just completely pivoting. He laid off half of his employees, and he really had a lot of resilience, and the company and the workers did too, in getting a product out that they ultimately sold 1 million copies of after 4 months. So that was really incredible. And then I think for the second part of your question, I would say that Vertex's founder, Joshua Boger, was probably my favorite founder, just because he stayed so true to his really great humanitarian mission of wanting to help people and make good medicine and really prioritizing the product.
Neat. Over to you. Well, let's same question. Favorite company, favorite founder.
Sure. So I think favorite company would have to be TSMC, just because it helped a lot of other companies launch off, other fabless firms that otherwise probably wouldn't have been able to start off because of unreliable outsourcing. And TSMC came in and just really helped launch a whole new sector of the industry, as well as being just such a successful project by the Taiwanese government and helping the Taiwanese people, creating jobs, creating a whole industry. And now it's just such an astronomical company beyond, I think, what anyone could have predicted when it was started. And definitely, hands down, my favorite founder would have to go to Thomas Petterfy, because his backstory is just insane. I mean, being born in the basement of a hospital during an air raid by Russia on Hungary, and then making it to the U.S. speaking no English. His only option for a really well-paying job was as a computer technician, because he just didn't know any of the language. So he was able to memorize about 100 words and study these textbooks, and was able to make it work on technology. And now, absolutely dominates his sector of the industry. Is just so impressive. It's a great immigration story.
Yeah. I think girls have committed. I tried to get some time over Thanksgiving, but they don't get off from school till like Tuesday or Wednesday. So that's not going to work. But I think they both have some time in January. So they will update the work they've done for any changes and then tackle more companies. Mike and Jason and I, Mike had already done a bit of this with Vertex Pharmaceutical, but I think as investors, we have way underestimated the importance of trying to learn more about the founder and the early stages of these companies, because I absolutely believe with Holly, I mean, look at what NVIDIA has done, and then look at what TSMC has done, and then look at what Thomas Petterfy has done. We can spend a lot of time on free cash flow and whether cash flow is growing or not, whether new products and size of moats and whatnot. But frankly, speaking for myself as an investor, I wish 10 years ago I'd paid more attention to focusing on the founder and the early stage of these companies. I think it adds enormously to investment performance. So, Mike and Jason, why don't we do the rest of the 30 minutes on healthcare? Next week, we'll have the benefit of the NVIDIA earnings when we can cover Apple, Amazon, Alphabet, Microsoft, and Tesla. But let's spend the rest of our time on healthcare. So over to the two of you.
There's certainly a lot of news around Lilly. They released some study results on their GLP-1 drug. Tirzepatide was found to reduce the risk of contracting type 2 diabetes by 94% in patients that are pre-diabetic. I kind of saw that and it sounded, that sounds right. That's expected, but it's a pretty outstanding result if we can prevent people from catching diabetes. It leads to a lot of complications, right? So if you can prevent a person from initially becoming diabetic and then prevent them from having all the complications downstream that come with that, it's a lifelong debilitating disease. That's a huge win. We've done a little, research on can these types of drugs in the long term provide a benefit to the growth in healthcare spending that the U.S. has. My personal opinion is they absolutely can. I think the cost of these drugs will come down, but even at their elevated cost today, I think the return on investing in this kind of thing and providing it at a maybe even a government program wide level would make sense, just from the reduced cost and the burden on the healthcare system in the decades to come. So I think that's a big result. The other news from Lilly is the FDA has taken their drug off the shortage list. So when a drug's on the shortage list, it allows compounding pharmacies to legally make a copycat product without running afoul of the patents. So that's the kind of thing that a lot of these compounding pharmacies and weight loss clinics and the company Hims and Hers are using to justify their production and commercialization of these copycat products. So with Lilly's coming off the FDA shortage list, they can't make that compound. Novo Nordisk's compound is still on the shortage list, although they're ramping up production as fast as they can as well. So when that comes off the shortage list, there won't be a pathway to legally make these at compounding pharmacies. What we're seeing from Hims and Hers, it'd be a huge impact to their business. They picked up a lot of business in the last quarter when they rolled out that product. They're saying that the workaround is if the approved version and the approved dosages don't work for a particular patient, they can make a compounded version that's specific to that patient at the proper dosage or pathway for administration. So if people, for whatever reason can't use a needle and they can make it in pill form, a compounding pharmacy can deliver the medicine in pill form, if that's the kind of option that's available. I think that's going to end up in a lot of lawsuits. So Lilly and Novo have been pretty aggressive to protect their patents on this, maybe for two reasons, because the lifespan of their patents isn't very long, and it's such a popular drug that there's a lot of copycats out there. It'll be interesting to see how this impacts Hims and Hers. Their stock has run up, I think, 100% since they announced that they're going to sell these compounded GLP-1 drugs. I think that's a huge risk for them that they'll be told to stop.
It's interesting from a public health perspective to see how the FDA balances maybe the benefits of keeping it open are so high that they may be more accommodative of a Hims and Hers. It'll be really interesting to see how these lawsuits play out.
Right. And I believe they're selling it for, I can't remember if they're selling it for $199 a month or $299 a month, but that's dramatically less than the $1,200 that it's said to cost out of pocket for the on-brand labeled drugs.
Right. How much appreciation do you think there'll be for Lilly and Novo as time goes on for their medicine?
I think they'll see a lot of competition. It's interesting that Lilly has gotten away with buying a lot of the earlier stage biotechs that are developing competing drugs without scrutiny, but they have been doing that. But when these GLP-1s were found to produce the dramatic weight loss that they do, so they were initially approved. Oh, Mike, do you remember the first year these were approved? It was long enough ago that the first generation of this kind of drug has come off patent. So there's a generic version of it, but you have to inject it daily. So it's not widely used. Once companies realize that the impact is beyond controlling A1C levels in diabetics, and that in non-diabetic people, it causes dramatic weight loss. Once they saw that, a lot of companies were chasing this for obvious reasons, right? We're seeing how big the market is.
Was it Lilly that acquired the company that their version of this not only caused you to lose weight faster, but it also caused you to build muscle?
Yeah, and they're pairing these drugs together. But yeah, there was one, I believe it was for muscular dystrophy, to see if they could induce muscle growth. And it also had the effect of causing weight loss. I don't know what state of development that is within Lilly now, but they could pair these drugs. And one of the side effects of the dramatic weight loss caused is you obviously lose muscle mass as well. But you could see something where you could induce weight loss and not lose muscle mass, or maybe even gain lean muscle mass. That's kind of a miracle drug out there.
If we look at page 19, Lilly's trading for $800 billion with about $8 billion of free cash flow, which is 100 times free cash flow. I guess the answer there is that they're making $8 billion off $36 billion of revenue, and these drugs will be taken up in a way where the revenue in a couple of years will be 60 or 70 billion. Will it have that kind of impact on Lilly, do you think, Jason?
Oh, I think it will. The estimates are for the overall market. The last one I saw, I think, was 80 billion a year, with Lilly taking the majority. Lilly and Novo will split it, but Lilly's going to be the larger winner of market share, which I think they already are now, even though Novo was first to market.
And will they be able to extend the patents by claiming that you add to your muscle rather than have muscle loss when you lose weight?
Absolutely. Yeah, they're working on all the subsequent versions. Lilly's is actually a dual agonist, so it has 2 modes of action within the body. They're working on one that has 3 modes of action. They're going to keep iterating on that. But I think if you're going to take this type of drug purely for weight loss, the amount of weight loss that these already provide is probably at a faster pace than that's healthy for a human. So I think it's more than effective enough today. They probably need to ramp down the doses so that the weight loss is at a more sustained pace and maybe fewer side effects. In the future versions, if they can reduce the side effects, that might be a big selling point. But I don't think driving towards a goal of greater and faster weight loss is really something that should be sought after, even though that's what these companies appear to be doing, and that's what how the FDA is evaluating them. But that's my 2 cents.
Yeah.
I have a wet blanket to throw on this conversation.
Do it.
Consensus forecast for revenue for Lilly for 2026 is $67 billion, which is a nice increase. That would assume they're going to do approximately the same cash flow margin as they're doing today. That means their forward multiple on cash flow for 2026 is 35. And we know that a bunch of these patents are going to start to run out. So I'm a little less excited about the valuation where it is here based on the amount of competition that's in this market. That being said, I wish we had been aware of this before. But I would be a little bit more concerned about holding it through 2026. Would you agree with that, Jason? I mean,
oh yeah,
okay.
Completely agree. It might be as early as 2026.
Oh yeah. I think some of them start. I mean, there's a lot of patents, right? And
right.
There's a bunch of different formulations, but what we've seen is that people are willing to pay out of pocket for this, and they'll certainly pay out of pocket and take a less convenient dose mechanism versus paying out of pocket, or paying out of pocket thousands of dollars a month versus paying $300 a month or whatever.
I think on a personal cost benefit analysis on it, it's if you can get the drug for $200 or $300 a month, you might be saving $200 or $300 in food and grocery bills. So it might not cost you anything out of pocket.
That's an interesting way to look at it.
Okay, let's take a quick break for a message from Oak Cliff Sailing.
Hi, Dawn Riley here from Oak Cliff Sailing. I'm down at the High Performance Beach, and we have pretty much one of everything, or more than one of everything, for the Olympics. And we're going to introduce ourselves and you to some of the people here. So talk.
My name is Aiden. I'm from the Bahamas. I'm sailing the Knocker 17 today, and I hope to have fun on this boat.
I'm Gavin. I'm from Connecticut. I'm also sailing with Aiden on the Knocker 17.
Okay, excellent. And then we're down here on the beach. Beautiful sunny day. And who do we have over here?
I'm Alistrina. I live in Locust Valley right around here. I'm sailing the FX today, and I want to become a great laser and 49er sailor.
Very good.
Hey, I'm Tyler Meadows. I'm sailing the 49er as well for the first time. Also from Long Island, New York, and I go to Northeastern.
Hi, I'm the high performance coach here, and I train all Olympic class boats. Hope to see more sailors going towards the Olympic campaign.
Okay, and really quickly, last but not least, Carlos.
Hi, I'm Carlo from Italy. Today I'm gonna sail Ilka 6. My goal is to be one of the top Italian sailors.
Excellent. And Carlos makes a mean pasta carbonara, so you never know what you're going to get here at Oak Cliff. So it's a high-performance beach. We have a lot of boats here, oakcliffsailing.org, and we hope to see you going fast on small boats.
And now, back to the show.
Just on a happier note, because Holly, very impressed with the Vertex Pharmaceuticals founder, I would normally expect the founder to stay on the board, be chairman, continue to try to guide the business forward. But apparently, he's really into scuba diving in the South Pacific and has a boat that made enough money from his Vertex Pharmaceuticals. So that's what he likes to do. But his successors at Vertex Pharmaceutical, unless my memory is poor, don't they have like a 10-person trial where they somehow made diabetes patients insulin independent for a year, and 10 out of the 12 it worked? I mean, I know that's very early days. That's not even phase one, but I mean, how I love this talk about Lilly, but it seems to me the idea is to try to make people healthier who have diabetes, not necessarily to lose weight, but to be able to make diabetes, especially type 1 diabetes, insulin independent, just seems more consistent with the overall view that the founder of Vertex Pharmaceutical espoused based on Holly's paper. So he made this life decision when he was 13 years old and kept at it. So I'm not begrudging him, scuba diving in the South Pacific. I mean, he certainly got an awful lot of good done. But is my memory right on that, Jason, that's a kind of a very early stage Vertex project?
Yeah, I believe it was 11 out of the 12 were effectively cured of type 1 diabetes. And that one's an autoimmune disorder and not, so your body's attacking your pancreas to cause that one. Even though it results in you being insulin dependent, but it's a very different disease.
And Jason, my understanding is they have a second trial that...
they have 3.
Oh, they have third. The second one that I'm aware of just eliminates the need for immunosuppression. So
right.
I wasn't aware of the third one, though.
Yeah, I think, they're testing the device that allows for the encapsulation of these islet cells, the stem cells.
Right.
Yeah, and then the trial with the combination of them.
Jason, how do you think this got started? Was it just a person at Vertex or a group at Vertex who took this on, or how?
That's a good question. This one's so early stage. We've looked into the origin of the other drugs in their portfolio, but not this program. I have seen some Juvenile Diabetes Research Foundation interviews where they talked about funding some of this research. So
yeah, they had an acquisition. Was it Sema Therapeutics? And I think that's where the initial candidates for these things came from.
I can't remember if that's where the stem cell part came from or the encapsulation device that allows it to bypass the immune system.
Mm-hmm. Well, either way, all of these, it's the funny thing about biopharma is that they all have their individual stories, right? Because there's typically some researcher somewhere that the concept started from, and then, through a lot of trial and error and persistence, they make it into animal trials, into human trials, and on.
Yeah, decades of work.
So Holly and Gwendolyn, we have plenty of interesting stuff for you to continue to dig into.
Yeah, when you're back in January. Yeah. Great. Good. Well, we pretty much used it up. We promise we'll be on NVIDIA and chips in general and software and page one next week. We've been criticized in past weeks by not spending enough time on healthcare, but I think we've done a large enough dose on healthcare so we can work on chips and page one companies next week. And in the meantime, everyone be well and stay healthy, and we'll be on 7 days from now. Take care.
The views expressed on this podcast are the hosts alone and do not constitute an offer to sell or a recommendation to purchase or a solicitation of an offer to buy any any security nor a recommendation for any investment product or service. While certain information contained herein has been obtained from sources believed to be reliable, neither the hosts nor any of their employers or their affiliates have independently verified this information, and its accuracy and completeness cannot be guaranteed. Accordingly, no representation or warranty, expressed or implied, is made as to, and no reliance should be placed on, the fairness, accuracy, timeliness, or completeness of this information. The hosts and all employers and their affiliated persons have no liability for this information, and no obligation to update the information or analysis contained herein in the future, and may or may not hold positions in the securities mentioned.